Welcome to MyStockScanner Live, your December 1st market guide. As the year winds down and headlines heat up, we'll scan the stories and run today's stock through quality, upside, and timing. That is the three-point playbook. It's Monday, and they might not be Santa's little helpers, but they are MyStockScanner's great guides. Liam Flavel and Hans-Henrik Nielsen survived Black Friday. They're still here. I see that one of them has an elf smile. That's always a good sign, but I'll start with the other one. It's Henrik. December is upon us. It seems like we're off to a little bit of a rocky start, isn't it?
Yes, there is a bit of drops in the market, mostly crypto, but futures are a bit down. Markets are a bit down.
Yeah. And Liam Flavel, I can't make out. It's the monkey behind you or in front of you. Anyway, ChatGPT turns 3 today. Will it make it to 4?
I think it'll probably make it to 4. I'm not sure it will get much further than that when you look at Gemini and companies like that.
And the question is, will it be making money at any point? We are not sure we
No.
can give the answer on that show today, but we do have a lot of other things on our show today. It's Monday. The three-point playbook portfolio is up by 33 point. Yeah, it should be 3%, but there was a stock sold, so we had 33.2%. We'll tell you which one it was. And we'll also talk about precious metal stock that was just added just in time for silver and gold rush that we are seeing. Bitcoin will definitely not be rushing anywhere. Monday is definitely seeing a drop from them. We'll talk why. And holders of crypto at least can warm themselves that they didn't fall as far as the Danish stock Shape Robotics did on Friday. 53% down. We'll explain why. And do you have questions for us? You're always welcome. Send them to us at fomo@mystockscanner.com. Also on your radio today, 2 birthdays, as we said. Tesla's big failure, the Cybertruck turns 2, and as you just heard, ChatGPT turns 3. I don't know who will be singing a birthday song. I might let Hans-Henrik go with the Tesla one. But we'll serve cake later, and a number of the day, it's 78%. We will tell you what it's all about. But as said, today, this morning, we came up to numbers that were not pretty. Crypto is falling. The futures in the stock markets look like they're a bit down on the other side of the Atlantics. Guys, what's going down? Hans-Henrik, you wrote about it in the market scan this morning.
Yes, the thing is, if we just quickly show crypto, I don't think it's a surprise to anyone that has been in a bit of a downtrend. The thing is, first of all, that there's stuff going on in Japan with that debt and the currency and so on. We have been written extensively about that, so I won't want to bore you with that. And then there's a company called MicroStrategy that says that they might be selling out of their Bitcoin. So that is pressuring everything down.
But everybody knows, of course, that it's December because everybody lit up the candle, at least here in Denmark today, and everybody's expecting that Santa rally. Does that mean that that's cancelled already, Liam?
Not necessarily cancelled. It's early days, and these things can change. A lot of these rallies are actually because a lot of fund managers will be offloading stocks towards the end of the year that they're either winning on or losing on. That will beef their numbers up and just position them to move into next year. So a time will tell on this.
One thing that we're definitely watching closely, and we're going to talk in details in just a bit. But as I said, we woke up this morning and saw Bitcoin being down, but we also saw gold and silver was up. Hans-Henrik, that's another thing we've been writing about extensively over the last couple of months, if not half a year almost.
Yes, absolutely. We think that there is a major upside in silver. We are not trading alone on what we think. We want to see confirmation in the market. Here are some of the smaller swing trades that could have been had in silver. What we are saying is that there's not produced enough silver. They spent massive amounts of silver in the entire green revolution. So we're not surprised that silver is going up, and we are so fortunate to have a couple of mining stocks.
We are indeed, and it is Monday, and as always, we open up the three-point playbook portfolio and take a look inside what is in that portfolio. And Liam, We can't put it off much longer. It's shining heavily in the background. It's a stock that we bought towards the end of the week. We're going to get into that in a second. That definitely is down the mining line. But here we overall see the performance of the stock. 32.19. We rounded up to 32.2. Tell us about it.
Yeah, I mean, to be honest, we had a good month compared to the S&P 500. We're up 0.6% even with everything going on in the market, and the S&P on a euro basis was down 0.1%. So we've outperformed there. We've underperformed the last few months, but overall for the whole year, we've absolutely nailed it. And if you look at our stats here, you can see that our average winners are 23% and our average losers are just 7% down. So, and we've got slightly more winners than losers. So actually, the strategy is exactly where we thought it would be, probably slightly higher. Yeah, we aim for around 20%. That was our original idea, with around a 10% drawdown. We're up 30% this year with a 7% drawdown. So it's I'm sure we'll have some different years in the next few years, but all averaging around there.
One of the things, and we will get to that in a second, is about how heavily, or rather how lightly, we're invested at that situation. Stig Bergström had a question about that in the members group, and we will get to that in just a second. But Liam, I've been teasing that we have more than a gold in our mouths, or silver, some of us for sure. There was a stock that we went into not long ago.
Yeah. Anglo Ashanti AU. We went into on the 18th November. So what's that, about 13 days, I think. We're up 8% on that in a couple of weeks, which is great. And we saw a lot of mining stocks starting to move up and get stronger. So that warned us, and that's with some of the new tech we're developing at the moment, which we will show off. But at the moment, we're just going to keep on teasing about it while we test it. But effectively, just very quickly from a playbook perspective, because not too much has changed since we bought into it. We asked 3 questions when we're going into a stock. Is it high quality? Is it undervalued, or is it cheap? So there's good upside. And is it a good time to actually buy from a technical point of view? I normally, the way I show people, I look at 3 key metrics. Quality score, 94 out of 100, fantastic. Earnings per share, this is where the analysts think it's going. This is where it has been in the past. It's going up through the roof, fantastic. PEG ratio below 2, 2.5. That's at 0.18. So again, fantastic. 3 ticks in the box. That is enough within looking at this for 3 seconds to tell me this is a stock that I want to look at more, invest more time in investigating what it is. And you can see
that's what's super important for people to understand, especially because is that it doesn't have to be complicated. You're basically guided almost by color here.
Yeah, exactly. And so we've got revenues, we've got returns on capital, we've got returns on equity, returns on invested capital, we've got free cash flow, all of these things here. But the key thing is it overwhelmingly green? In which case, it's a really interesting stock. And then you can look at some of the numbers and think, well, in the red ones, are we worried about something like the analysts dropping 4% in the last 30 days? Maybe, but we teach that in our courses. The second question that we ask is there an upside? Is the stock cheap at the moment, or is it expensive? So here we can see that we're just putting these lines, so they're related to the price earnings ratio and the earnings per share. So basically, the way you calculate the price in here is looking at the future earnings per share and multiplying it by the PE ratio, which is the amount of risk that an investor is going to take on, the average investor we think is going to take on in the future. And we do that by looking at the history. So we can come here and see, okay, my base case is that investors will pay a 14 PE for a stock. And we can look historically down at the bottom and see actually it's been 35, it's been 14, it's down to 9, it's been 30. So from an average point of view, that's not a bad number that we can get out of it. And we can see here going into next year, there's in our best case, there's a 34% chance of getting, there's a chance of getting 34% profit. We think we'll probably get 17%. And in our worst case scenario, if it drops back down to this red line, we might lose 5%. So
quick question, because again, as if you're a beginner on this, and I see the lines sort of pop out of all the 4 lines, especially in this calendar year, isn't that a sale sign then?
No, because it's still going up. So if we look in TradingView here, we can see that the stock is still in an uptrend, and we define an uptrend as being above some key moving averages. And the key one that we generally use is the 50-day. This is this green line here. So this is just the average of the last 50 days of prices for the stock. And you can see that it's really been used as a bit of a resistor or a support point, where it's got down to here. It might have dipped just beneath it, and then it's bounced off it again, and it's carried on going up. So that defines the corridor that a stock is in. If it drops below it and really looks meaningfully like it's going to drop down, then we will sell. That's our trigger to sell. We do sometimes use the 200-day, but in a lot of our stocks, the 200-day is so far away, we don't want to drop down to there. So it doesn't form part of our equation. You've also just got down here our MTI, which is our momentum indicators. And that's exactly the same figures. One's on a daily series, one's on a weekly. The weekly is more of a long-term trend. Is it still in that? And the daily will change a little bit more frequently to say, okay, from a daily perspective, you can see it went red here as it started dipping. So that could have been an indication that we would look to sell, but we'd look for other confirming factors like the moving average there as well.
And again, this is of course not a sort of a recommendation of a stock. It's just we tell what we're doing. A situation like this where you have double green still quick here at the end in regards to our gold stock here. Double green, is it still time to buy?
It could well be. You look at two things there. Is it still in its uptrend, which it is at the moment? The MTI and the fact it's above its 50-day moving average tells us that. We also look here. So with the figures, I tend to look at the base case against the bear case. If the base case is over double the base case on a negative basis, then actually that's not bad. And then we look at this: is 20% worth getting out of bed for and putting our money to work? Yes, it is. If that was only 3 or 4 or 10%, then actually I'd start thinking, well, maybe there are better stocks out there to invest in. So at the moment, yeah, you could. I would still go into this now if I was starting up a new portfolio.
And just to calm down everybody, is that Liam will get out of bed just to do the show as well, not just waiting for a stock to get up.
Sometimes.
But there's another stock that we need to talk about today. Hans-Henrik, you're up. You've been very quiet, and it's not because that you've been grounded or anything, but that's what happened to Airbus. It was grounded, but it got up and fly again. But it's still a stock that we can tell from the portfolio we just got out of.
Yeah, we just sold it, and that is a good extra information to what Liam just told, because that was a lot about the entry. The exit I can do fairly quickly here, because looking at Airbus is a good quality company. There's no doubt there. I won't go in depth with that. Liam just did that. So really good quality here, Airbus. We can see that the valuation part is not bad. There is some upside potential, but something happened today here, and that is exactly what Liam were talking about. This is the analysis I sent, the explanation. We're trying to train our members to see this themselves. So it dropped, and we're not selling just because it drops, but it went below this green line, the 50-day moving average here. Then, as you can see, I drew this blue line. It tried to get up. It bounced on the downside of the 50-day EMA here, or SMA moving average, and then it went down. And we were giving it a bit of room to move because there was some news, and we just wanted to see where's the market moving. But when it broke this line, I had put in an alert here, and it triggered here. We sold at 198.50, something like that today. Right now, that seems like the right place to exit. Had the 200-day moving average, the black line, been just under here, we would have given it a bit more room. But as you can see, there were 11% down to the next support line, so we just exited. It's a no-brainer. It's just following our rules.
And
I would just add very quickly the explanation of why and the rules that were broken, and a bit more on what Hans just said. We've added into the original stock of the day forum article that we had in there. So we've got the original analysis in here, and we're also now starting to update why we came out of stuff or why we went into things as well. So that was just that.
And the only thing that I was going to add to it is basically that's the strategy that you guys follow all the time, in that sense that you have decided what the rules are as you enter the stock, because you set up the rules for entering the stock and you also know your exit. And since we are in that sort of general talk in regards to the portfolio, as I've been teasing a little bit, Stig Bergström wrote us in the members forum on Facebook and asked, isn't it a bit cheeky that we only in by about 50%? Shouldn't we be more invested in a market that really have been green or have good stocks to buy?
Yeah, I wrote an article about that the other day. And the thing is, we have a fairly tight, what is called a stop loss, which means we are being sent out of our stocks quite quickly. We can also see that our average loser is not very big. I think it's something like
7%, I think.
8%. And that is why we do like to be sent out of our stocks quickly. Let's just take Airbus as an example again here, because Airbus might get back. Let's say that Airbus is now spending a couple of months down here, and then it might get back, and we could have made a profit on it. And people are saying, well, wasn't it wrong to leave then? That depends on a lot. We like low volatility in our portfolio, meaning we don't like big swings. We like to have our maximum drawdown at 7%. And let's say it spends 2 months underwater, as it's called here. In these 2 months, this money is tied up. So the money can't be put into another thing that runs. And that is kind of our idea. However, Liam is working on something.
Okay, but let me just be devil's advocate just for a little bit, because 50% in the bank right now, that's not a lot of upside.
Well, it's a lot compared to Warren Buffett.
Warren Buffett I mean that the interest you get on having your money sitting in cash is not a lot, is it?
What you should remember is that being in cash is also an active investment decision. And a lot of people forget that. They think, oh, I have money on the sidelines. Oh, I want them to get into work. And that is great, of course, in an uptrending market. But having money in cash can be an active trading decision. So what we're doing is we're letting our strategy control this. The fact that we sold this morning was not something where we said, oh, we want a lower exposure to the market. No, we just got a sell signal. And in volatile times, that often precedes a big downturn in the market, we get sent out of most of our stocks.
So we actually have just on that subject, just to add to it very quickly, so the stocks we can choose out of for the portfolio, we take out of our stock of the day. So we produce a stock of the day every day that says this is a quality stock, this is the upside, may not be in the right position yet to buy, but this is why we would pick it. So it's an educational thing as well for people. What we found, choosing out of a pool of 300 stocks, we check them pretty much every day. And there's not a lot there at the moment to go into. However, the new stock map functionality that we've got coming in changes that completely, and that's that means we've suddenly got potentially thousands of stocks to go into around the world that all show strength at various different times. And
there we say a revolution.
Maybe.
He's like a kid in a candy store, or somebody looking forward to Christmas. But let me throw you guys a curveball, because I was also teasing this at the start of the show. Come on, guys, shave robotics. I thought robots were going to be the future, and then on Friday, goodbye, 53%. What happened, guys?
Well, the thing is that if we just pick it here quickly in the playbook, we wouldn't have looked at it. It's just a no-go. Doesn't mean that it can't go up. It just doesn't fit our strategy. Losing money most year. Yes, revenue is going up, and negative return on the capital. Nothing to look for there. Looking in the trading view chart here, Liam talked about the MTIs down here. With their double green, we normally don't touch a stock. So we would have been out from up here in this 30, 35-ish kind of area. Right now, it's down in 4. So there were some guarantees for some loans that were withdrawn. They were postponing their earnings release. That is never a good sign. I would not be too clever about this and trying to guess where this is going. We are not catching a falling knife, so we wouldn't touch it.
No, but we might need a knife now, because to cut a birthday cake, and we have one, because there's a double birthday on our show today, and one is turning 2, the other one is turning 3. The one, you can say, huge failure. That's the car on top here, the Cybertruck from Tesla, huge failure. The other one, ChatGPT, not so big a failure. at least not yet. Guys, a double birthday. I promised we won't sing. Let me split it up between you. Liam, you get to talk about ChatGPT. Of course, it's not a stock we can invest in, but it's investable with all the competition that's going on. Google basically took a piece of their cake, didn't they?
They took a massive piece of cake. Sam Altman, who's the CEO of ChatGPT or OpenAI, put out an internal memo over the weekend, basically putting OpenAI on a war footing because they're extremely worried by it. Gemini 3 came out a couple of weeks ago. It's been rumored for quite a while, and it's been seen in the wild. Google did this great thing where they put some of their models out just randomly to people to say, have a try of this just for a few minutes. And I'd heard really good things about it, and it does seem to be exceptional in what it does compared to the others. The issue you've got, HSBC did release something last week, a bit of a research note saying even if OpenAI hit their benchmarks and they actually get to 2030 with the number of subscribers they think they're going to get, they're still going to need $207 billion extra to fund their compute. And someone like Google doesn't need that. So
well, the thing is that OpenAI just sort of teased that they might do advertising on their site. That might be a game
That'll
changer.
improve the user experience.
Well, depends on what you're seeking for, of course, and if you get the cream that you need for some ailment, or what do I know? If you're looking for that, you'll get sent directly to it. Hans-Henrik, I tell you, we have 4 minutes left, and that's just to give you sort of an end date of your speech about Tesla here and Elon Musk.
Sure.
The Cybertruck, 2 years.
Yeah, no, that is a complete failure. It's just so terrible. And the thing, I hate to say I told you so, but it was predictable. First, it was the Tesla should go up in price because of their huge margins. They are gone now. Then it was a Dojo supercomputer. That's gone now. Then it was AI. I don't know really where that is. Then it was a Cybertruck and the trucks they have and the it's like the price is being carried by promises. The fact is, I don't hate Tesla. I hate the pricing of Tesla. And just to do it very quickly, right now they are up in the 200, 250s in PE, which means in theory that could be some upside. But let's just remove all the garbage claims and just say, let's pretend it was actually priced like a proper industrial company or just some of the other car companies. PEs of 15 to 35 would send the stock down by 80 to 90%. That is where I think it should go.
Okay, how about starting your Monday with a wash like that? Then we're going. I think there was some rich people in Switzerland that celebrated over the weekend because they had a referendum in regards to putting on a tax on if you had more than 50 million Swiss franc, that's about $62 million, you should pay an inherited tax of 50%. That got rejected, and that's number of the day by 78% of the Swiss population. They voted that down simply as that.
Strange.
Yeah, strange. But we're coming up at the end here, and that means that we have to look forward to the coming days. We're going to put out a Tuesday poll tomorrow, and we're going to ask our users, because they're very much smarter than us, where Bitcoin is going to sit at the end of the year. But I'm going to put you two guys in the spot already now. Liam, where's Bitcoin going to sit at the end of the year? We can ask the monkey behind
you. Am I
you.
rude to you? Yeah, or the two in front of me. Yeah. To be honest, the answer is I have no idea. And the second part of the answer is I'm not even sure I really care that much. For us, it's a useful barometer of what the retail investor is looking at the moment. So we saw Bitcoin dropping and Ether dropping last week and before that, so we can look at it and say we think the market's still going to be under a bit of pressure. So
Hans-Henrik, is he just talking around and not
Yeah,
saying a
he's
number?
a
I asked him for a number, and the
complete
mouth
chicken.
moves, and I hear no numbers.
No,
Come with a number.
complete chicken. Yeah, 48,211.
Okay.
0.5.
Come on, a number.
Okay, all right. I will go 48,212.
There we go. Thank you so much. See, you guys, you have to. I start to believe that you're the head of the Fed. You're chairman of the Fed, because he's going to speak tonight, Danish time. I know that it won't be a decision in regards to where the rate is going in the U.S., but I know Hans-Henrik will be watching. What are you looking for?
Well, I'm pretty much sure what he will say, but I will be listening to what he's indicating of how divided Fed is, because right now there's about 87% chance priced into the market that they will lower the rate in 10 days, I think it is. They are still in the blind. They don't have job numbers. They don't have inflation numbers. They don't have anything unless it's back from September. So I'm going to listen to if he's indicating a bit more clearly if there is some common idea about what they will do in Fed that can move the market.
And another thing that we're looking forward to this week is, of course, numbers from various companies. I know that, Liam, you will especially probably look tomorrow because we have Marvel and Pure Storage, but also CrowdStrike.
Yep.
Anything that stands out to you as that's the number that's going to be key for you?
To be honest, the thing I'm more looking at Marvel, it's a sort of also ran in the processor stakes. CrowdStrike's the more interesting one for me because it's more pervasive across all the different cloud hyperscalers. So they're a good barometer for what's going on in that type of market, that side of the market.
We'll definitely keep you updated when we are back with our show on Wednesday at noon. Then we'll know those numbers, of course, and keep an eye out for our platform. There will be articles and index to be found there. And do you have questions for Hans-Henrik and Liam? FOMO@MyStockScanner.com. That's it. That's the December 1st scan from MyStockScanner Live. As the year wraps up, stay steady, stay selective, and stick to quality, upside, and timing. MyStockScanner Live is back on Wednesday at noon. Until then, happy investing. See you guys.